Searching for credible data to back up your strategies and proposals? With an Insider Intelligence subscription, we deliver everything you need right to your fingertips. Join over 100,000 subscribers that have access to thousands of forecasts, charts, industry KPIs, and insights around key topics. Buy now, pay later, changing Gen Z payment habits and preferences, how to win new customers, all developed and derived from a rigorous and proprietary methodology that you can count on. If you're not already, start leveraging Insider Intelligence research, data, and insights to save time and get buy-in faster. Visit www.insiderintelligence.com to learn more.
I think Apple wants to be the all-in-one ecosystem, and they want to be the ultimate super app. And I think it's only going to keep growing. Like Apple Pay Later is a really new addition. It's not even fully rolled out yet. And I just think it's going to keep going. If you think about the Apple Card, that's been really growing in popularity, their credit card. And I think we're just going to see more and more products and services added to that list.
Hello, everyone, and welcome to the Banking and Payments Show, a behind-the-numbers podcast from eMarketer. Today is July 11th. I'm Rob Rubin, GM of Financial Services, and your host today. If you enjoy this podcast, please give us a 5-star rating and subscribe. The title of today's episode is Gen Z Unboxed, LOLFinTech. I invited Eleni, Digalaki, and Grace Broadbent back to talk about how Gen Z is different from older generations in that a lot of their financial service product consumption will be embedded with non-financial service specific experiences. Hey, Eleni. Hi, Grace. How are you?
Hey, Rob. Thanks for having me. I'm good. How are you?
I'm doing great.
Yeah, hey, Rob. Happy to be here.
Well, you say that now, Grace, but before we get into it, it's time for some quick-fire questions for you.
I'm ready.
So these are easy. The first one is, where do you live?
New York City.
What borough?
I live in the Lower East Side, so
Nice.
in Manhattan.
In Manhattan. How long does it take you to get to work?
Right now, approximately 10 seconds, because my desk is about like 20 feet from my bed. But if I were to go to the office, only like 20 minutes.
And how often do you go in?
I was there twice last week, but not often normally.
All right. Did you do anything fun over the July 4th weekend a couple of weeks ago?
I stayed in the city. I actually went to Coney Island for the first time ever to try to do the traditional New York 4th.
Did you see the hot dog eating contest?
No, so I went on Saturday instead of Tuesday. My friends convinced me that going on the actual hot dog eating contest day would be miserable with crowds of people. So we did it just a couple days early, but we did all eat hot dogs and rode the rides and everything.
All right. So here's my last quick-fire question about hot dog eating. Ketchup or mustard?
Both.
Oh, all right. I wasn't expecting that. That's great. Well, that was fun, and we have a lot to cover, so let's get right to the headlines. In the headlines, we chat about a top story as it relates to our episode, and I've chosen a story that we published a month ago about the importance of convenience when choosing where to shop. Convenience is king for 82% of consumers, is the article. The article reviews the results of a survey from Numerator, which looked at how important convenience factors like location and hours are when choosing where to shop. A couple of things before I get into it. Just as I said, convenience is king, I realize that's kind of an old-fashioned headline. It should be like convenience rules because it genderfies convenience. Anyway. What was interesting to me is Gen Z was the only generation where self-checkout was a top 5 convenience factor, and other factors like the ability to shop anywhere, anytime were important for this generation. So my take is that for a financial services company, winning a generation will require thinking about convenience in a completely different way. Because if you're like an old bank or a small bank that has a lot of branches, they think about convenience in terms of drive-throughs and branch hours. So I'm going to ask you guys, what makes financial service companies like a bank or an insurance company convenient?
Well, right now, they are not very convenient. They're definitely getting better, but they're not there. In the olden days, as I'd say, you used to have to go to a branch to open up a credit card. But these days, I saw a recent data point where about 90% of general consumer-facing credit cards are opened up digitally, whether mobile or on the internet.
90%?
Yes, just about.
That's a lot.
Yeah, so it's really changed from, of course, there are still those holdouts that go in person, but it's definitely so much more convenient to be done online. That being said, the process is still not as convenient as it could be. It still takes time to go through approval and set up the account and figure out which credit card you're getting and so on.
I was at this event that I was speaking at in June. It was with bank CMOs. It was about 25 bank CMOs, and they were generally from small and regional banks. And the person who was speaking before me asked them, he was talking about digital account opening, and he asked them, by a show of hands, how many can get their digital account opening process to under 4 minutes, which seems like a long time. And maybe like a handful of them, I'm going to say 25% of them raised their hands and they got a lot of congratulations for that. But that seems like a long time to be able to open an account.
I think it is a long time. And that's definitely something that has to do with convenience, like how fast you can open a bank account. My somewhat educated guess will be like for your average bank, it takes around 6 minutes. And I think probably after, 4 or 5 minutes or 3 minutes even, you're seeing sort of abandonment rates go up a lot.
Isn't that because they just asked for the really personal information? They got nervous.
Yeah. And I don't know, it's just a very long time. You can open accounts with Apple in 1 minute. Like you can do it in less than 1 minute, have Apple Cash account, right?
Uh-huh.
And you can have it open and you can fund it instantly as well. Because then for a bank account, based on our account opening benchmark that we did last year, funding a new checking account is top of mind for consumers, Gen Zers, particularly. The setting up direct deposit when opening an account was supported by only 2 of the 14 banks in our study. And that was the most demanded feature in the entire study. And making an initial deposit using a payment app like PayPal or Venmo was supported by no bank.
Right.
And when you look at Apple, for example, you open the account and then you can instantly fund it with Apple Pay. It's like as seamless as it gets.
Funding is a big problem for banks because to open an account, you need to transfer money digitally to open it, but maybe...
Yeah. Also, going through the account opening process doesn't mean you have an open account. Most account opening processes for banks are not straight through processes. So you might have to wait even a day or however long for the account to be open and usable.
What about car insurance? Is it convenient to get car insurance?
It's more convenient than it used to be. I think a lot of the big players now have really good sort of digital channels for buying insurance for products that are simple, like car insurance. So if you're asking about car insurance, I would say, yes, it's somewhat convenient. When we're looking at embedded car insurance, we can see how much more convenient it could be, though. So, for example, Root has partnered with Carvana, who are like a reseller of secondhand cars, and someone who buys a car on their platform can buy insurance within 3 clicks. So during the checkout process of the car buying application process, they can add car insurance with 3 clicks. So definitely that's more convenient.
Okay, well, we're going to talk about that in our next segment, which provides us with a good transition. I think that convenience rules. I'm going to change that headline for 82%. And I think that convenience always ruled, just that the definition of convenience changes.
Yeah.
And I think that for banks and all financial service companies, now that we have more convenient ways to use financial service products, like embedding them into other things and other experiences, they really have to get with the program in terms of convenience. In our next segment, Story by Numbers, we pick a number or two that helps us dig deeper into the episode's topic. And today for Story by Numbers, I had a hard time picking just 2 numbers, honestly, because there's so many. But for my first number, which comes from a recent report we published on Apple in consumer finance, 46% of Apple iPhone owners will use Apple Pay in 2023, according to our forecasts. That's a lot of Apple Pay users. Now, payments obviously are the most prevalent example of embedded finance, but how else, now that Apple has that huge base of people who are using Apple Pay, how else is Apple embedding their digital wallet into specifically Gen Zers' lives?
Yes, absolutely it is. The iPhone is really becoming the ultimate super app, combining a huge ecosystem of digital products and services. Of course, there's traditional Apple Pay that you can use at a traditional point of sale, but you can also use it for transit payments. Like I live in New York City, I just hold my phone near
the turnstile kiosk.
I hold my phone near the turnstile and I just walk right in without thinking about it. See, I think about it so little that I don't even know what it is. Yeah. I don't even have to press a code or anything. Like I don't do my passcode or anything. I literally just hold my phone. It could not be easier.
So you're the frustrated person behind me because I always put my Metro card in backwards and then it spits out and then I have to put it back.
You might be the person I hate, yes.
Yeah.
That's no longer acceptable, Rob.
I know.
But even looking like outside of big cities like New York City, there's also like Apple CarPlay. And now all of a sudden you can make payments through your car, through connected car experiences. You can pay for fuel. There's restaurants that are starting to add to it. So you can like buy your fast food from your car.
But what about things outside of payments? Like that all is sort of transactional. Like Apple's there when you're buying something, when you're filling up for gas and you want to get a cup of coffee or something. But what about other parts of financial services? What are they going to extend from their savings account, for example?
Yeah, so it's like Apple Cash and Apple Savings are the main other products. I know you said outside of payments, but you mentioned Gen Zers, so I'm going to stick with payments just because we didn't mention Apple Pay later. This is growing rapidly with like BNPL in general with this generation, and almost half will use the payment method this year per our forecast. And that's another way how they're getting Gen Zers to use their products sort of. And all of those younger people are primed to use Apple because they already own an iPhone, right? Apparently 87% of US teens own an iPhone.
I know. Which
is crazy. I mean, I don't know. It sounds crazy to me.
They can use it and talk at the same time.
Yeah. Yeah, exactly. When I was a teen, I had a massive phone, which only use was for my mom to be able to make sure I'm safe, like calls, nothing else.
When I was a teen, our phone was in the kitchen and it was attached to a wall.
I think their products are very well sort of tailored to that generation, and that generation already is part of their ecosystem.
So do you think they're going to extend outside of these products? You know, as these teens get older and need more complex financial services products for investing, et cetera, do you think Apple's going to go there?
I think so, yes. I think Apple wants to be the all-in-one ecosystem. They want to be the ultimate super app. And I think it's only going to keep growing. Like Apple Pay Later is a really new addition. It's not even fully rolled out yet. And I just think it's going to keep going. If you think about the Apple Card, that's been really growing in popularity, their credit card. And I think we're just going to see more and more products and services added to that list.
I agree. And I think if you look at trust, it points to the same direction. Like apparently adult Gen Z digital banking users are more likely to trust Apple to provide them financial services than they are to trust their primary bank, according to our Banking Digital Trust Benchmark Survey, which tells me they can offer something that's more complex and people will still feel safe to get it from them.
I think they did a smart thing with taking a stand on privacy and what they've done with that. So I think it works really well. I want to jump to my second number, 79%. That's the percentage of adult Gen Z consumers who would want auto insurance bundled with their car purchase. Mm-hmm. So we talked about auto insurance and embedded insurance. It seems like a sure thing. It seems convenient. But for me, and I just come from a different perspective, auto insurance was one of those competitive things that you would shop for auto insurance to get the most competitive rate. And it feels like if it's just part of the car, then you're going to end up paying more for auto insurance than you would have otherwise. What do you think?
Yeah. So just to sort of caveat at the beginning is that in theory, with embedded insurance, you get flexible, personalized offers where, you know, the policies underwritten dynamically at sort of that point of sale, and the insurer can tap data from the brand that they're partnered with, let's say the auto manufacturer, data that they wouldn't otherwise have access to, and use it to price that policy. So the price should be fair. It doesn't mean it's the cheaper one out there. It just means that it's fair.
Maybe there'll be just the option to not have it bundled so that you can go the traditional route. But maybe the other thing that's going to happen is it's going to be more standardized pricing, sort of a utility.
It's not about whether it's standardized. So it could be dynamically priced, but you still get one provider, right? It's not a price comparison tool. You have to trust that you're getting a good deal, or you have to value convenience higher than getting the best rate in the market.
Unless the car buying site, like if it's the manufacturer and you're buying the car, they have their own little super app and they make money on selling the insurance and giving you that. So they build that into their process.
Sure. But I think the idea with sort of buying car insurance at checkout of like a car purchase is that it doesn't interrupt that UX.
You're buying the car. The insurance is just part, like the tires.
Yeah. And in 3 clicks, you have added insurance. If you wanted to shop around, you would be shopping around. There are many tools to be doing that. It's more about that convenience. And I think also what's very interesting is that embedded insurance shortens that consideration cycle tremendously, because you're offered something at exactly the point when you need it. So maybe it's not even that you value convenience more than value, but maybe it's in the moment where you need it. So conversion becomes so much easier that you don't even think about that. You don't even think, oh, could I be getting a better deal elsewhere? It's more like, oh, click, click, done. This is so easy.
But maybe we should think.
Well, maybe we should, yeah. And, you know, car insurance, it's an example where, to me, it's not super exciting when it comes to embedded insurance, just because it's a mandatory product, right? So you are going to get it. I agree, somewhere you could get a better price, but I mean, you are going to buy that product. Embedded insurance is much more interesting when we're looking at products that have lower penetration, like life insurance, that people need it, but they don't have it, and no one mandates them to.
Where do you embed life insurance?
Chubb has done that with Nubank. I think it's a great example within sort of Nubank's digital banking app for their sort of Brazilian customers, which is a massive base, by the way. And again, I think it's like 3 questions, and you have term life insurance, which is one of the simpler life insurance products. And this is where, again, the fact that the consideration cycle becomes much shorter and the sort of coverage is offered at the point of need makes a lot of sense and might make conversions easier. Imagine having it like in a digital mortgage application.
Right. I can see that. I want to take this conversation to our final segment, which is for argument's sake. And to sum up our story by numbers, I think we can all see the writing on the wall that Apple's not done in terms of building financial service products and being integrated 100% into people's lives. And maybe that's okay. We'll find out. And then in the second number, we really started to talk about what other kinds of products and embedded experiences. So for argument's sake, we take a topic and discuss it nicely, obviously, with some different perspectives. And today's topic, and this is why it's an extension, is whether you can envision a material share, and I'll define that as more than 10% of Gen Z consumers, and maybe the next generation after that can go their whole lives without establishing direct relationships with financial service providers. So I would argue that they're not going to be able to do that. Most people are going to have a relationship at some point with the traditional financial service provider. Anybody want to tell me why that might not be possible, or I might not be right?
Yes, I disagree with you. So,
all right, now we got it.
I think Gen Z could get close to getting material share without establishing those relationships, but I absolutely envision a future where the next generation, like Gen Alpha, does that. I mean, thinking back to the Apple example, almost everything you need is wrapped up in the Apple's digital wallet, especially from a payments perspective. And as we said, they're not done growing. And that's just one example. There's so many fintechs developing their own credit cards and savings accounts and everything that I think the options are going to be there to never establish a direct relationship.
I mean, why do they need it? You have like banking, so that's like cash, right? I can sort of see how maybe you don't need a bank for checking account, right?
I think the more complex your needs, the more difficult it becomes to not have a primary bank relationship today, at least. Like if you want to invest large sums of money, or if you want to get a mortgage, or if you want to talk about pensions or annuities, you are going to need a financial services provider today, most of the time. I mean, you can get mortgages with SoFi, and there are fintechs that tackle complex financial services products even today. I think in the future, even those more complex products will be offered by fintech and other disruptors.
Because there's like Robinhood and robo investing, so you can self-direct a lot of investing.
Yeah, but argument is, would the average person go their whole life with robo investing versus having like a human give them personalized financial advice?
I'm going to argue against myself and say that for that, I think yes.
Mm-hmm.
Yeah, and I think it really goes back to the convenience factor that we were talking about earlier, that if the customer experience is good, if it's really convenient to do it through these apps people already have, why would they switch to something more complicated and something less convenient?
I agree. And, you know, there are other sort of transformations happening with ChatGPT, for example, and maybe non-human advice will look very, very human in a few years from now.
That's right. I once argued that if you ask someone today if you'd rather talk to a human or a machine, most people will tell you that they'd rather talk to a human. But I think that once the machines become faster and better at answering your questions, you're going to prefer to talk to a machine.
Yeah. I mean, one is faster and better, but the other side is just being able to trust that what you get is accurate information. And again, the more complex the need or the more money at stake, the more difficult that gets, right?
So that's really interesting, the trust issue, because we've been talking about, and it's a couple of episodes now, honestly, that we've been talking about how Apple's going to dominate the world because everybody uses an iPhone, especially the young ones, and all of this. But it's only going to take one bad breach for Apple to lose that trust. No? Right? I mean, if something bad happens and somehow some people break into Apple's ecosystem and people lose a bunch of their money and Apple is now deemed unsafe.
But I think the same can be said for other financial institutions. Everything is one breach away. I don't think that differentiates Apple from anything else.
I agree.
I know. I agree with both you on that. But the thing is that it just means that everyone's one breach away from going from ruler to loser. I just think that it sort of speaks to the fact that what we think today as what's going to happen could change quickly for an event unforeseen, as we know. And I think that really wraps us up for today. It's been a really interesting show. I've enjoyed it so much. I want to thank you guys for it. I'm not sure we came to a conclusion because I think you guys might have convinced me, because I was saying, of course, nobody's going to have to get through their whole life without having a relationship with a financial service provider. But I sort of think maybe you're right. Maybe convenience is going to rule, and it is possible maybe with Gen Alpha more than Gen Z. I want to thank both Eleni and Grace for joining. This was so much fun. Thank you, guys.
Yeah, thanks for having me.
Yeah, thank you, Rob. Pleasure as always.
Yeah, it was so much fun. And I want to thank everyone for listening to the Banking and Payment Show and eMarketer podcast. Also, thank you to our editor, Todd. In today's episode, we referenced an article and 2 reports that we recently published on Gen Z consumers and embedded finance, and we put links in the show notes. Our next episode is going to be on July 25th, and you'll not want to miss it. Bye, everyone.
Bye, everyone.
Bye, everyone. Thanks.